Hello and welcome to Pro Trader Strategies market commentary for Cyber Monday. That's Monday, December the 2nd. My name's Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've done commentary on everything from economic to geopolitical market analysis. I'm here in these daily market commentaries to not only talk about those things, the markets, the economic data, how it impacts the overall markets, but also how to implement options into our portfolios. Why? Because options are the best way, especially for newer traders and people with smaller account values, to implement a good portfolio strategy. And we can do that by using options. Anyway, without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's talk about the overall economic picture with some good data that we got out. Remember, we always look at the flash ISM numbers, which is PMI numbers, which is Purchasing Managers Index. It's very forward-looking. That comes out before the data that we get today, and that is the final numbers. And they're usually pretty close to being in line, as we're going to see reflective here today. But let's start with across the pond in Europe. We got the PMI numbers. Remember, anything above 50 is expansion in the economy. Anything below 50 is contraction. And we got this Spanish PMI number coming in at 47.5, which was higher than expected at 46.5. But again, another reading below 50 showing contraction, and that is about 6 in a row for Spain. It isn't one of the leading manufacturing sectors of the European economy, but it is something we do need to keep an eye on. Note that these numbers are, if you were looking for a silver lining on these PMI numbers, they are trending back towards 50, which is maybe seeing the lows that we've seen. Maybe those are the lows, so trending back towards positive territory. Italian manufacturing PMI coming in line with expectations at 47.6. That is a better reading than what was expected, just albeit slightly. Again, though, trending higher. They've had, almost a year of negative rates, but that's, it's Italy, and we know that they've been having a lot of problems as well. All right, final manufacturing PMI for France came in at 51.7. It is really the only one that we've seen in positive territory. They've been back and forth, not really showing recession necessarily. So French manufacturing is the second leading manufacturing sector of the European region. Germany being the major manufacturing sector in the European region, and that number coming in at 44.1, which is again higher than what was expected at 43.8, and again trending higher. The low we saw there was a couple of months ago, and that was below. We could say it was right around 41. So that was 2 months ago. But again, trending back higher, which is a good thing. And then the overall rest of the European economic area, we got aside from Great Britain, we got 46.9, expected to be 46.6, so slightly lower than expected there, but pretty close to being in line. Manufacturing PMI for the Great Britain region came in at 48.9, expected to be 48.9, expected to be 48.3. Again, another negative reading in a sense that below 50 is considered negative, but we are starting to see that trend higher. It was slightly lower than last month's number, but it is still trending in the right direction, if you will. Then we move over here to the United States, and we got our PMI numbers, but it is through the Institute for Supply Management. That is the ISM, Purchasing Managers Index, and we got a 48.1, expected to be 49.2. A lot of people are talking about how this manufacturing sector is really being negatively impacted by all the tariffs and the back and forth with China. Again, today, Trump basically said we're not really any further along with China than what we were before. So the markets are starting to wane a little bit. Not only on that, this economic data is not very good, and it is very forward looking. So that is something we need to keep an eye on as well. All right, let's talk about the overall markets. We've got crude oil moving a little bit higher today, which is a bit surprising to me with the bad economic data, especially out of the manufacturing sector. That should be one of the major demand-driven aspects of crude oil, because a lot of the distillates go into the manufacturing sector. So we would think that it would cause weakness as there's less demand and increasing supply here in crude oil, but it is making a move higher, and that could be basically because most of the markets are down on the day. Again, surprising that we're seeing gold come off a little bit today. That being said, we would think it would be more of a flight to safety with the equities being down. Dow Jones down over 100 points. NASDAQ was down as well. But we'll get to that here in a minute. Bonds are off by a point. You know, I've expected these bonds to move up into the 160 area and kind of hang out there. Right now, Fed is, in a holding pattern. I don't think that these economic data points are enough to really drive the FOMC to lower interest rates at this next meeting here. But I do believe that there are rate cuts possibly down the road, especially if we consistently start to see these negative forward-looking aspects. All right, we've got the VIX spiking higher by 2.5 points right now, back up into 15 handle, and that's because we're seeing the Dow Jones equities across the board on the lows of the day right now. You can see down 242 points. We were trying to make a move higher earlier overnight with China coming out with good economic data. As you can see, we will see the highs printed almost lockstep in line with what we've seen in the past. That happened overnight, so those numbers are not really solid, and we would expect to revisit that. Now, we've talked about the equities being stuck in a trend here or in a trend channel, and it looks like we might be starting to break that trend channel. If I can get a line up here, let's just try and see. We've been talking about it kind of being in line with that. I guess it's not going to want me to draw that differently, but there we go. We're testing the downward side of that trend channel there. That's kind of how I've drawn it up recently. A break below that would expect us to come down here and start revisiting this point of control down here. So we've got a couple of support areas. We are just feeling like we're getting a little overextended. We do have a nice little volume node happening there where price is being accepted, despite the fact that we were stuck in a little tight range there. That built up some nice volume there, but I would expect if we start seeing further weakness and break below that little trend channel I have there to at least test the 8165 area and then possibly come back down all the way and test the 8,000 mark, which 8,000 lines up with this value area high here. As you can see here, value area high lines up with 8,000. That's a psychological level, but we've known since I've been talking to you guys that these psychological levels really start coming into the market, and we can see them really show up on the volume profile. Now, E-mini S&Ps did create a new all-time high. That was off of that China data. Then once we've got the European and United States economic data, you can see that we have started to really start to slide here, down almost a percentage point on the day, almost down 30 points as we speak. Not quite the lows, as you can see, a bit of a bottom there, but we'll take a look at this chart right here. And this is the daily chart. You can see the overnight trade with very bullishness coming into the day, especially with the economic data coming out of China right here. And then once we started seeing those people flush themselves out, that basically got the market back to neutral. Today's economic data being released at 7:30 here, you could see that that was not something the market wanted to see, knowing that that's going to impact probably the holiday shopping season. These guys are the leading indicator, like I've mentioned before, and as you can see, we've sold off very close to the lows right now, printed, maybe getting a bit of a bottom here as some profit taking is going to take place and try and move this market higher. But I have to say that with the economic data, it does not bode well going forward here, especially the way we're seeing these chart setups happen. All right, let's talk about a couple of things that I've got going on With McDonald's, I'm kind of holding off on this. It's actually one of the ones that is in the green. There's very few stocks in the green, but a lot of that is tech heavy. As we saw with the NASDAQ down almost as much as the Dow Jones. The Dow Jones down by much less in percentage terms, but we're seeing a bit of a rotation here as people are putting money into maybe even healthcare, utilities. Those are going to be more of the bellwethers, the kind of boring stocks, putting money to work there. Things like McDonald's, where you know they're not going to go anywhere anytime soon necessarily. That's going to be more of a safe haven type trade and pulling money out of those more volatile aspects like the tech sector. So with McDonald's, I haven't done anything. I've left on those 185 puts that I shorted against my long stock. That's going to be like a dollar cost average that I'm going to try to implement with this strategy. And if I don't get hit on those 185 puts, I'll just roll those out again, collect another credit, and continue to lower my basis on this trade with McDonald's, which started out at $200, and I've continued to sell calls and puts against that position in order to lower that basis, which increases my probability of success, right? If I can lower my break even, I can get to that break even much easier, which is just slightly lower than $200 right now. I am noticing, though, as many of you may very well be, that we are getting this golden cross or whatever right here with the 50-day and the 200-day moving average. Usually when we get that kind of thing, that is more of a bearish trend. So I'm going to be keeping an eye on that. But at the end of the day, I don't mind owning McDonald's in my portfolio. And if I can dollar cost average this down and get those 185s, that's going to be good, because I mean that puts us way down here at the point of control, as very close to where our break even is on this trade. And I think that McDonald's has done very well. They're getting ready to release their veggie burger or whatever as well. So I think that all those things bode well for McDonald's, especially if we're seeing this market really start to correct. All right, with eBay. Now you guys remember with eBay, this is another earnings trade that I ended up taking the stock on as well. And that's because I had sold the October 37 puts for that earnings trade. You can see immediately the market broke below that. This is where the earnings trade happened. My 37 puts I thought would be supported a little bit better with the 78 Fibonacci over here. It didn't work out. We broke below that and have struggled to get back to the point of control here, which is where I'm kind of expecting the market to want to migrate to. But remember, tech not doing too well. eBay really is a tech type company, but I decided to cover my December 37 calls in there, which I originally sold for 43 cents and bought those back for 12 cents. Why? Because we got this bit of a move down, right? Now, I'm expecting Cyber Monday, being today, to come out with some very good numbers. Now, if we see some really good stuff coming out of this, then we should see a push higher in eBay, and I wanted to take the opportunity to cover those calls before that happened. So I've lowered my basis on this. Now my break even, right? I'm long eBay at $37. I've got a total credit of 80 cents from the 37 cents on the selling those puts and the 43 cents that I sold on the calls. Actually, what did I say? That was 80 cents minus the 12 cents that I bought back. So 68 cents reduction in my cost basis on that. So that means my break even is right there around $36.34 or something like that, 32 cents. So got my break even down to where the point of control is, right? Because my point of control is at 36.88-ish, maybe slightly below that. So my break even is lining up right with the point of control. If we can get a move back to there, now I'm at break even, right? And if I get a move higher again, I'll probably look to sell some more of those 37 calls as that price increases with the directional move that we get. Otherwise, I'm going to hold off on this. Anything maybe breaking below this $33 or $34 is where I'm going to get maybe a little bit more aggressive with buying some protection there. Maybe dollar cost averaging, maybe buy some puts or something like that. I don't know yet at this point. Most likely look to sell some puts if we get much more of a breakdown. All right, that's about it. That's all I've got for you guys today. Just working through some of these different trades that I've got going on. Wanted to talk about that because you know what? We need to talk about these losers more than we talk about the winners, to be quite honest. The winners come and go quickly. The losers stay with us, and we talk about how we can manage that risk, which is what you guys should also be doing in your portfolios. Whenever you get a correction in some of those stocks that you have, that's the time to really start getting aggressive and doing some dollar cost averaging. It's not just go out there and buy that stock at that price. The best opportunity is to sell some puts. And then if you get a 10% correction or something like that, that's usually where your broker starts calling you and saying, hey, you need to buy some of this because it's had a bit of a correction. Well, if you are ahead of that game well in advance of that, selling these puts and selling calls against it, then you are constantly lowering basis on what that trade value is, and that's how you create yield in your portfolio. And we're going to be doing a whole course on that coming up real soon, so stay tuned for that. I'm going to be talking about regular portfolios, how we manage that risk in and around our portfolio, because a lot of you guys out there have stocks that you own, and I'm going to be showing you how to trade these options around that particular stock that you have. So check that out at protraderstrategies.com, and if you can't take that, take it easy.